Let's start with the Fidelity Bank results, which we saw today. What your impressions of those numbers and your rating of the stock?
I think at the first glance, I would say that the results really met our expectation. We had actually expected an improvement in Q2 compared to Q1, and also even from December 2009 results as well, we expected an improvement. And what we saw was, in terms of gross earnings, we actually anticipated that there would be a decline in gross earnings, considering the fact that in the atmosphere right now, there's still risk aversion in the atmosphere. And we expected that most banks in Q1 would actually be more or less be very cautious and trying to build up on their loan books and really analyzing their risk asset framework and criteria and trying to improve on that. And we actually did see that. We saw a decline in gross earnings, but in terms of PBT, we saw a significant improvement from last year. We saw over 100% improvement in PBT and also in PAT as well. And also in terms of valuations right now, we still have assigned, in terms of price to book earnings, it's trading at 0.45 times its 2010 book value compared to a sector average of 1.06 times, very, very huge discount. And also if you consider the fact that, and based on that, and in terms of PE as well, it's trading on a 2010 PE level of 11 times, and for 2011, we expect it to come down significantly to about 5.6 times, and that's a very huge discount compared to where the industry is trading. And
so that's a buy for you.
Sure, it's a buy for us. Our current target price is about 3.49, and it's trading at about 40% upside right now, and so it's been quite impressive.
Okay,
so
let's review the bank earnings season. We've seen quite a few results come out. In fact, I think we only have about 3 more of the cleared banks to release numbers: Access Bank, GT Bank, and I believe Sky Bank. So pretty much, we're now anticipating only those that are providing audited results, which explains the delay to a large extent. What are the key takeaways for you from the results we've seen so far? And based on that, what will you be looking for in Q3 results?
I think broadly, the results have been in line with our expectation. We did expect that there will be more improvement in Q2 than what we saw in Q1. And we also felt that would solidify the base of where banks are right now and make investors more at peace with the sector and realize that there's still potential in the sector. And what we've seen so far, even though there were a few disappointments anyways, we actually expected improved earnings from UBA and also from FCMB. But I think overall, we've seen stronger earnings. Also, we anticipated that there will obviously be a slowdown in loan growth and in some cases declining loans and advances, and we saw that. And I think what's key to note also is that we've seen an improvement in cost to income ratios and also in NPL ratios as well. They've been very major improvements, and some banks are already recognizing write-backs from the provisions, huge provisions they took in 2009, and we expect that to also improve earnings in 2010 and also in 2011 as well. So in my view, really, I think what we've seen so far shows that there's still value in the banking sector, and our house view is that there would obviously be improved activity in the second half of the year than what we saw in first half.
So a stronger second half.
Yeah, sure. We'd actually see stronger second half, and also we'd expect that would continue into 2011 as well, even though we know going forward there will be pressure. At some point, we would actually expect to see pressure on margins, because the reality is that you wouldn't expect the current low cost of funding. Deposit rates have been extremely low, and I think the bank guarantee, CBN guarantees, explains why that is the case, and also all the activities done by the CBN right now to try and keep the sector afloat. And I think my view is that when we see reforms settled, and then that would, to a very large extent, improve competition in the sector. Right. And would
very quickly, because we have to wrap up now. A question I asked a guest last week on the rescued banks: is this a time to buy? Very quickly, what are your thoughts?
In my view, as an investor, if I want to take ownership position and really take control of the banks and be in an executive management position, obviously I would consider it. If I were a bank, I would obviously consider it, because I'll be able to use that to improve my increase my footprint. But if I'm just a sideline investor, I'll still stay out right now.
As a portfolio investor?
As a portfolio investor,
right
definitely not
okay.
at this point.
All right. Thanks a lot, Muyiwa, for coming on to the program.
It's my
Thanks
pleasure.
for your thoughts on that.